what's strategic? Not running out of money.
A financial strategist and CFO of CXAI. Joy's career spans over 2 decades across various industries, including roles at Service Rocket, Google, and BlackRock. Her expertise in managing large-scale financial operations has made her a leader.
Obviously, if you can boost your cash reserves, I would probably be a little bit more conservative now, hoard cash for a while. Think like Warren Buffett. He has a shed load of cash if he wants to do anything. He has another shed load if the economy goes down. Look at our debt. What's our interest payments? What is our carrying costs? What loans have we entered into? Where can we renegotiate?
How are you approaching, or how do you recommend finance leaders approach their roles when there's uncertainty?
You have to.
Welcome to today's episode of 5 to 50. I'm super excited to have Joy Mbanugo, a financial strategist and CFO of CXAI, where she steers a company's finances and governance. Joy's career spans over 2 decades across various industries, including roles at Service Rocket, Google, and BlackRock. Her expertise in managing large-scale financial operations and driving strategic finance initiatives has made her a leader, enhancing enterprise value everywhere she goes. She leverages her vast experience to push organizations and people to achieve their full potential through disciplined financial stewardship. Today, we'll dive into Joy's journey, her approach to financial leadership, and the innovative practices she's implemented in her roles. Joy, welcome to the show.
Thank you. I need you to rewrite my LinkedIn bio.
There we go. Happy to do it anytime. I love it. So let's start a little bit at the end. Let's talk about right now. There's a lot of uncertainty in the market, and being in this finance position, we're forced to often take more leadership roles when there's times of uncertainty. And so,
Yeah.
how are you approaching, or how do you recommend finance leaders approach their roles when there's uncertainty?
Yeah. Well, one obvious thing that I'm sure all of us are thinking about is just making sure you have a strong balance sheet to weather the storm, right? And I say that in any economy, good economy, bad economy, cash is king or queen, right? In a great economy, or even now, like cash is great for opportunities if you want to do any type of M&A activity, or it's great if, let's say the economy tanks and we end up in like a COVID type economy, the beginning of COVID, not the end when things started, when we had all the IPOs and a lot of deals happening. But let's say we go through a really, really tough time, which it seems like the economists are saying might happen. We don't know what's going to happen with the tariffs, but I would say brace for impact. But a good way to make sure you're bracing for impact, and I know I'm like holding like this, like someone's getting ready to push me, is if you have a good balance sheet. A good balance sheet goes a long way in any economy. So
Yeah.
it's a very textbook answer, but that's the way I think my CEO and I are preparing for anything that comes in the next couple of months or year.
Yeah. And so what are those things on the balance sheet for many of our listeners that are running small and medium-sized businesses? They've probably started, within the last 20 years, there hasn't been, outside of COVID, there hasn't been too much in terms of contraction in the economy and slowdown. So this might be a new muscle that everyone's building. What are those things on the balance sheet they should look for? What are some ways to strengthen the balance sheet?
Yeah. So, obviously, like if you can boost your cash reserves, I would probably be a little bit more conservative now with what you're doing with cash.
Mhm.
Depending on the size of the company, right? I worked at a company that had billions of dollars in cash, and they were super conservative and still are. You can go Google it, no pun
Mhm.
intended. But they're heavily invested in treasuries and cash and money markets and nothing super excited. So if you have a lot of your excess cash tied up in, or if you have excess capacity in non-liquid or semi-liquid assets that you can, maybe dispose of, not at too much of a loss, I would say I would do that. I would just look at our bank accounts, just all of the cash risk management. I'd start there. Then I'd look at like our debts and like what debts are we carrying? What's our interest payments? What is our
Mhm.
carrying costs? What loans have we entered into? Where can we renegotiate if we need to? And try to, I know I'm going to keep saying this, and this is what I would say from a personal finance standpoint, just hoard cash for a while, right? Like think like Warren Buffett, everyone's like, "Oh, why is he selling out of these positions?" I don't know why he is, but guess what? He has a shed load of cash if he wants to do anything. He has a
Yep.
shed load of cash if the economy goes up. He has another shed load if the economy goes down. So I think, if we all think like Warren Buffett, we'd be well positioned to weather any storm. And definitely look at, some companies are debt financed, but just look at your terms. Do you have a crazy high interest rate? Did you get to enjoy borrowing at low interest rates? So just looking at stuff like that.
That makes sense. And I appreciate you keeping us from putting an E on this podcast episode with your shed load terminology. That's great.
Sorry.
So, no, I love it. So, we talked about improving the balance sheet. What role does finance play in shoring up the balance sheet of a business? How should that position lead the charge?
I feel like finance should be at the forefront, right? Like we're a pretty small company, but even at, any of my previous employers, I would say finance was at the helm, at the table with the CEO, having conversations about, just a cash position and, going over the financials. So I couldn't imagine anyone else in the company having a conversation with the CEO about the balance sheet without me. I would be highly offended, right? A
Right.
lot of people talk about, strategic finance and the CFO should be part of strategy. And one of my favorite lines, and I say this all the time, my husband's a controller and he's like a awesome treasurer kind of underneath that. I always tell people, what's strategic? Not running out of money.
That's
Right?
right.
And so I know that sounds very trite, but we will see over the next couple of months a lot of companies, run out of money. And we've seen it, right? We've seen some VC backed companies that just, they raise $100 million and you turn around and boom, $100 million is gone. Right. And I'm not saying that they need to hoard cash, but they should spend wisely.
Yeah.
Right.
Yeah.
You can't go crazy just because you have $100 million. If you have 110, you're
Yeah.
toast.
That's right.
And so I think, finance has to be at the forefront. Finance has to be very diligent about providing very clear, very consistent financials to the business, depending on how you're structured, who looks at it, COO, CEO, and, the board, et cetera. And just be very diligent about being open and transparent about where the company is from a financial standpoint and planning ahead, right? Like, I assume that all of us who are in the finance world are planning from a cash standpoint. We have our rolling forecast, but I'm thinking like, how much runway do we have, right? And I need to be providing that information to the CEO and manage it almost like hand to hand combat with our cash. Like, okay, what are you doing and how
Yeah.
are we deploying it? And so it from a finance standpoint, I think right now, like you absolutely have to. It may not be the sexy strategic deal flow and all the other things that people want to do, but right now, having cash is sexy.
Yeah. Absolutely. Yeah. It's great. It's a great point. Knowing your cash balance and knowing your runway are requirements. They're not nice to haves. And so if you don't know that as a business owner or as a business leader, you gotta know it right away.
Yeah, and you should know it. And the one thing I learned from my controller friends, and I love to give controllers a lot of credit, not because I'm trying to get a nice birthday present for my husband. I am. He's a controller. But the one thing I learned from him is like every company he goes to, he knows the cash balance. Like every day. Like I could call him right now. What's the cash balance? And he would know. And I think I learned that from him, right? Like my background is like tax and laws. So it's like structuring and all that kind of stuff. But like you can't do the fun stuff and do it well without the fundamentals, right? Like I think a lot of people wanna fly before they can even run. And you got to be able to walk, then run, and then take off. And so having the
Yep.
fundamentals, knowing your cash balance every single day, knowing your run rate every single day is super important.
That's awesome. So looking at cash, we'll stay on there for a second. A lot of finance leaders or a lot of entrepreneurs get confused between true cash and the net cash, and understanding when to take into consideration debt or payable credit cards. This is a little bit in the weeds, but you really are talking about understanding cash after paying any current obligations, right?
Yeah. I think, you know, I think if you are at a small to medium company, besides your balance sheet, let's talk about the cash flow statement, right? Like,
Mhm.
what's your cash balance? What are your what are you getting from investing? What are you getting from financing? What are you getting from operations? And just understanding, like you said, your net cash position and being able to look at that and say, okay, we're not getting much from investing. We're getting probably too much from financing and not enough from operating. We need to figure this out because, depending on the company and the type of mix that you want and, what your goals are as a company, maybe it makes the most sense to have more operating cash, right? And you want to have more operating cash, more investing cash, maybe some financing, right? Like you need to look at like the mix of the type of cash that you have. And I know that sounds weird, like, money is money. Money
Yeah.
is not, all cash is not the same. And so you need to look at what type of cash you have. So in addition to looking at the balance sheet, you need to turn very quickly to the cash flow statement. And I know all the CFOs who are listening to this and controllers and FP&A folks, so they got it in the back. So I'm not telling folks anything that they don't already know. It's just,
Yeah.
a nice little reminder. Look at all of your financials.
I agree, but let's dive in a little bit more. When you say all cash is not created equal, to the average business owner, this might come as a surprise. What do
Yeah.
you mean by that, and how
Right.
should they
Yeah.
think?
Yeah. So like very basic. So if I sell a t-shirt or I sell this necklace and I get $10 or, $10 cash in and then my expenses, like call it cash expenses are five and then I have $5 in cash left, that's great because I have five, well, let's say six, we made a profit. I have like, you know, $6 operating cash left. Like that's good money, right? That is the cash I have after paying all of my expenses and it's in my bank account, right? Now let's say we went out and borrowed 20, we went out and borrowed money, right? Not saying that cash isn't good because you might have to, depending on what type of company you are, you might have to borrow money
Mhm.
to grow, but you have to be careful with that, right? Because you don't want the money that you borrow to necessarily outweigh operations. And then what do you do with the cash that you get from operations? Are you using that to refund operations, which is totally fine? That makes sense. You have to put money back into the business. Or do you have any excess from that $6 from this necklace that you can then invest? That's really good money. The operations cash is great, but the investable cash is also great because then you can do, that gives you the runway to do fun stuff.
Right. Yeah, I love it.
Yeah, not
Sorry.
and sorry, not that debt doesn't, but it can get you have to be so careful, it can get you into a little bit of trouble.
I agree. Yeah, you have to be super careful on understanding what terms you
Yes.
have
Yeah.
received your money.
Yeah.
If you
Yeah.
using your t-shirt example, if you sold the t-shirt and you have cash remaining, you already delivered your service. You delivered your product. That's your money. I take money from a bank. That's money that you got to give back,
Yeah,
right?
that is not your money.
That's right. So it comes with a
That's the bank's
cost.
money.
It comes with a
Yeah.
cost. It's the
Yep.
interest rate. Yeah. But the benefit of debt is that it doesn't come with any dilution, right? You own 100% of your business after debt. That's not true when it comes to equity. When you're giving up equity, you're getting cash where you don't have to pay back until there's some sort of exit. And that could be super expensive as well, right?
Yeah, that could be expensive and that can yeah, if you're the owner and let's say you own 50%, you wake up one day and your 50% can quickly turn into 10 to 20, right?
Mhm. Yep.
Depending on how many rounds and, you know, how many investors, et cetera. And it can be really complicated. So um, you have to be careful about the money you take from people that are not your customers.
Yep.
Money from customers is always good. Not saying money from investors or whoever they may be. I don't want to call out any industry because I'm industry agnostic, but you have to be careful because that is their money,
Yep.
right? Whether it's equity funding, it's still kind of their money because they're saying like here's some money, but then I want X percent astronomical return,
Mhm.
X many years from now. And oh, by the way, I'm going to take like a good chunk of your company and we're going to be holding hands and skipping for the next couple of years until I get my money out of this
Yeah.
company, right? So you
Yep.
have to be, you have to be mindful about the money that you take.
Yep, I agree. It's always interesting. People celebrate these funding announcements from startups
Yes.
saying congratulations, or we're super excited to say that we raised $100 million, and that's
Yes.
congratulations.
Yeah.
But also you just diluted yourself by whatever the percentage of that ownership was. And so,
Exactly.
to the extent that
Exactly.
you can fund things through operations and still maintain your growth trajectory, you're going to be in a much better position in the future. Plus, you don't have anybody looking over your shoulder.
Right, and unless you're really gonna be unless you're positioned to become a unicorn, and I would even argue, like, you know, not just a barely there unicorn, like a solid, like, 3 to $5 billion valuation and a good valuation, not a fake, I don't wanna say fake one, but not inflated, but, like, if, with the potential for, you have strong ARR. Like you're not just like, oh, we have 100 million ARR, so now we're going, now we're a unicorn and all of the magical numbers. Like you
Mhm.
have very strong fundamentals. You should really reconsider, equity financing. It may not make sense for you. It may not, and maybe debt funding makes sense in that matter.
Yeah,
It just depends. It just depends.
right. You need to know what kind of business you're in, what your industry
Yes.
is, what options are out there.
Yeah. What are your peers doing?
Right.
What are your peers doing? And are you taking this money to grow and go? Are you taking this money to maintain steady state? Are you taking the money to, invest in operations so that you get more? You need to
Mhm.
buy machinery, you need to buy more inventory, whatever it is. You have to be very mindful about why you're taking money from any, I don't want to call it stranger, but any non-customer. Why are
Yeah,
you taking the money? And be
that's right.
very clear and those dollars have to have goals, and you need to put all of those dollars to work.
Yep, makes sense.
Hey everyone, I want to take a moment to talk about how we at ProSeer are simplifying accounting and finance for entrepreneurs. Through our outsourced accounting, fractional CFO services, proactive tax planning, and accounting software implementations, we cut out unnecessary complexity for business owners and entrepreneurs. Our approach provides real-time insights, practical tax strategies, and a clear roadmap to help our clients grow their businesses. If you'd like to learn more, feel free to book a free consultation with me by visiting proseer.co. That's PROSEER.co. Now, back to the show.
Let's talk about the finance function a little bit more. Let's talk about the differences between small companies and large companies. And let's talk about just the growth trajectory of finance from the the age of a company or the
Yeah.
size or what the
Yeah,
need.
yeah, yeah. Yeah, yeah. I think a lot of people, or not, I don't want to say a lot of people. I think the smaller you are, so let's say you're, private, maybe $5 million in revenue, something like that, or less. It may behoove you to get a controller, right? Like in a controller that's talented, or maybe even an outsourced controller. Like I think the term CFO is like super popular, and oh, there's a lot of contract CFOs and all that stuff now, or
Fractional
um,
CFOs.
fractional. Yeah, that's the new term, not contract, fractional. But, like, if you don't have that much revenue and you have, like, one bank account and one entity, a great controller will go a long way. Now, as you start to grow and you start fundraising or you take on debt, let's say you go from, like, 5 to 10 million or 5 to 20 million, then you need to start looking at other functions and, add in more people. Maybe you have a controller, maybe you have a head of FP&A, or maybe you have a VP of finance at some point. And then let's say you wanna, I'm thinking about fundraising. I'm thinking about like private and public. Like maybe you get more money, maybe you get more revenue, or you get more fundraising. Then you need to think maybe it's time for a CFO, because a CFO is expensive, right? Like, and I'm not saying you need to be cheap, but you really need to think about like, do I really need a CFO, or do I just need a controller and a head of finance or a VP of finance. And then when you get to like that 50 to 100 million range, like, then you need like the whole gamut. We're talking, you need to add tax people. I have to give shout out to tax people. I used to be a tax nerd back in the day. My auditors will laugh, but back in the day.
Yeah.
You need to add tax people. I don't know about treasury. Maybe your controller can do treasury. You may need to add a couple of analysts who can build out, your FP&A function, because you're going to be looking at analytics. You want to do a lot of budgeting. You may be doing more fundraising, and you need more information. I mean, your AR, AP, maybe you're upskilling your controller, and so you outsource, or you put like your AP, AR functions in a lower cost jurisdiction. So I would say, like, as you grow, your finance and accounting function should grow incrementally. I guess I'm probably more of the mindset of keeping finance and accounting not as small as possible, but nimble. I worked at Google. It was nimble there. I worked at BlackRock. It was very nimble there. And so I come from that background of, I've never worked at a company where finance was like took over the company, and that just doesn't make any sense. But keeping it to the right size, almost like one person shy of what you need, right? Because that also gives, a lot of people talk about the finance function and making sure you have the right stack, but you also want to give the people that you hire opportunity to grow.
Yep. Yep. I completely agree. Now, so you mentioned three key distinct roles in that kind of market, of which everyone would grow on. You said controller, FP&A, and VP of finance. And how do you think about those roles, and what role do they play in businesses?
Yeah, so let's start with a VP of finance. So if you have a VP of finance, the whole finance and accounting team could, in theory, report to this person. Um, and they could have oversight and almost act like a de facto CFO, but not the cost of a CFO.
Right.
And they would be, again, depending on the size, reporting to maybe the founders if there's no COO, or, working with the business, working with sales, and then giving direction to the rest of the team. So your controller, in my mind, is overseeing AP, AR, cash/treasury, depending on what you want to call it, closing the books, maybe tax, maybe some other operational stuff. So all of the running of the finance, like your finance
Walking it
systems, like,
back. Yep.
yeah. I would say your controller is doing all that. Your finance person, or your analyst, or your head of FP&A, they're working with, sales, and I would even throw your controller in there, because the controller is looking in the past and FP&A is looking into the future. But I think to understand either one, everybody needs to work together. And I've seen this not happen, and it's a problem, right? Because the controller's like, I'm just closing the books, like, leave me alone. And the, FP&A team is like, I'm predicting the future, so leave me alone. And really, they should be working together, looking at trends. Is there seasonality in our revenue? Do we have concentration in one area? Because, the controller has a lot of information about history that could, not the past is prologue, but like that history could help the FP&A team do projections, like think
Yeah.
about budget. They need to be working together on cash forecasting for sure, right?
Right.
Because if FP&A is predicting sales and the controller is, controlling the cash position, they need to be working together. Like, okay, I expect to have $5 million coming in, but 2 million of that is going to be cash after operations. Like, FP&A may not know, like, what's the after, like, the net cash position, right? They may or may not, depending. A good one, a good FP&A person may. So that's the way I see, like, all of those roles working together. And
Good.
then you can add on some other funky stuff. Like I said, tax, you could throw a tax I don't want to say throw a tax person. Sorry to all my friends in tax. You could put a tax person under the controller or under that area. That's where I would put it. Don't discount tax. Don't discount state and local and all the weird, funky taxes that come up, depending on your industry. So that's the way I see those three roles kind of working together. And then when you're big enough, and you have more like, we're going to be doing massive fund, the $100 million raises or the strategic initiatives, the M&A, the deals and all that type of stuff, then maybe it's time to bring in a CFO.
Right. Yeah, I agree. And I think the way that we kind of approach it is finance sits kind of in the center of the business because it's a connection between sales, from operations, from people, to making sure all the bills are paid, making sure your customers are paying on time. And so keeping everybody kind of accountable to the goals that they all set and agree to together.
Yeah, for sure. Completely agree. They should be. And if you're not in the middle of everything, find a way to like make it like force yourself, like not, force yourself sounds terrible, but like politely invite yourself to the middle of like just the business.
And so how do you do that? What are some recommendations you have, or how do you see differences in businesses that are operating between those that have finance in a central role versus don't?
I think companies that have finance as the central role, like I can't disclose too much about the company I work for before, but I feel like finance was such an integral part of the company. Like I think I can say this, like because I have a lot of respect for the CEO. Like shout out to Ralph Castaneda and everybody at Service Rocket. But what was really cool about that company is that everyone at the company had to understand EBITDA. Can you imagine a whole company of people understanding what EBITDA is?
Yeah.
I was shocked. Like, uh, it was like it's like a good. I'm talking about hundreds of people. It's not a 50-person company.
Yeah.
Hundreds of people understanding EBITDA, and when you have that, the business, everyone in the business makes different decisions, and that's because the CEO and finance is at the center of the company,
Yep.
and that makes a huge difference.
No, I love that. And so you mentioned EBITDA at Service Rocket was kind of the North Star. How do you determine, or how should finance or how should leadership determine what metrics to track? Because every business is different.
Yeah, I mean, you can look at your peers, and depending on if you're public, private, if you're PE backed, VC backed, or founder owned, it's hard to just say EBITDA is the way, or cash is the way, or ARR. Like it's just gonna vary by industry, by type of company. So I would compare like, right, like I'm in the SaaS space. So ARR generally is everything and then growth and all this and just year over year growth. But, same for, and I would say that's probably the same for a lot of VC backed companies. They
Mhm.
look at ARR and they want to hit
Right.
that, $100 million target or whatever it is. It might be different if I'm a private company and I'm, founder led, founder owned, I'd want to hit that North Star, but maybe that's not everything. Maybe
Right.
what's most important to me is the cash position. Maybe
Hmm.
I do like a super employee profit sharing where I pay out a lot of the cash to the employees. So that's
Right.
really the metric that I'm measured by. So it
Yeah.
really depends on the industry, peers, and your own, the company's overall growth goals, I think is important.
And the life cycle, right? And the economy. We start the conversation talking about cash. ARR is super important, but ARR is independent of profit,
Yeah.
right?
Oh
And
yeah.
so
Yeah.
profit can drive cash flow. And
Yeah.
so if you're thinking about preparing for uncertainty in the economy, you might want to adjust your North Star goals there.
Yeah, for sure.
Right?
For sure.
Uh, so let's talk about kind of the topic of the day, or the next other topic of the day. Let's talk about AI and its role in finance and finance management. You're working for an AI company. How do you see AI playing within the finance role department? How can it be leveraged now, and let's see in the future?
So I am fortunate to be in this space and work for an amazing CEO, and not that I'm trying to butter him up, but like one of the things he said to me, he sends me a lot of articles about AI just in general, and he was like, "Hey, there are a lot of like cool finance AI tools. You should look into them." And he's like, but you should also consider building your own AI agent. And so agentic AI is really popular right now to some people, right? Like I said, agentic AI in another space, and people are like, what? And you say it in, and I don't want to stereotype Silicon Valley or tech people or in Tech Alley and in Austin, all the places where we have tech companies, but when you say agentic AI in the tech space, everyone knows what you're talking about. When you say it in the non-tech space, people think you're crazy. But I think we're in a really cool time where finance has a little bit more control over our destiny, right? So before it was just like you'd have to wait on an ERP and get information from an ERP and then report that way. But now I can get a download from an ERP. I could take my trial balance. You know, I could create financials. I could automate process and procedures with APIs between different, systems that can now talk to each other, maybe link an agent between those systems. One of the things that I've been toying around with is because I don't have an FP&A team, can I create an FP&A agent? And so I
Right.
literally went to ChatGPT and was like, here are the tools I use. What can I do? Here are the metrics. And like, they gave me a roadmap. I haven't
Yeah.
created it yet, but I'm looking into it and like, how I download certain information into I don't say what tool, but download certain information into like a workbook type tool and then layer on top of that an AI agent to do analytics. And so I haven't completed it, but
Yeah.
that's one of the things I'm looking into. And so finance people have a little bit of creative license now to
Mhm.
do that, depending on the company. If you work for a company that encourages that. So I'm encouraged to do that because we are an AI company. So there is AI in everything we do, even in finance, and that surprises people. But even me, and I am not a technical person. I just want everybody like I'm not a technical person, but I am trying to, and that you maybe come back to me in a couple of weeks, and let's see if my agent is up and running.
Awesome. Will do. Should accounting and finance people be optimistic or nervous regarding the advancements in AI here?
Well, I'm optimistic because I feel like we've needed a lot of this ease to analyze data and synthesize data that may not have existed before, or we would have to wait to get it right. Like, so you use the ERP, but then you may have to get like another tool to bolt onto your ERP to do analytics. Whereas now you don't necessarily need that. You may just need the raw data. And then you could take that raw data and put it into a tool or create an agent or, write a script and then come up with your own analytics. So I feel like
Yep.
it's a time to be excited. It'll be interesting to see if we get to the point where AI is closing the books because closing the books is hard for any
Mhm.
company. It
Yep.
varies by industry. There's no one set rules, will we train AI to like understand all of the rev rec procedures for all of the different types of companies? Maybe. And if that's the case, great, because then it makes auditing it easier because
Right. And
we have
cheaper.
like standard protocols. So I guess I'm excited because I'm playing around in it and it's just the industry that I'm in. But I could see if I weren't in this industry, because I'm from Ohio, so I like to give a shout out to the Midwest. If I were, in, I don't want to say manufacturing, but let's call like more old, like traditional. I want to say old school, traditional manufacturing. It could be scary, right? Like it sounds scary. Like you have some mythical robot over here doing something in analytics and it's not a human being. Like that just sounds like, Terminator 2, right? Like,
I understand. Yeah, and I'm optimistic. I think that the people that are looking to embrace it are going to be able to leverage it to do amazing things and elevate those that are hesitant to embrace or hesitant to learn. And this goes through all parts of all history. If you're looking towards the future, looking to learn things and leverage whatever the latest and greatest is while testing and verifying, you should be able to set yourself up for success in the future. So awesome. Well, let's take us out with some rapid fire questions here.
okay, I
Uh,
love those.
we've had such a great conversation. Let's see what we got. All right. So what is one financial tool you cannot work without?
A workbook type tool.
Okay.
I
You're
think
not
we're
going to
all gonna
use.
live in Google Sheets or Excel, like, no
Yeah.
matter what. Like, I think, until somebody creates something better, like, I can't live without Excel or Google Sheets. Like, I
Yeah.
just can't.
Sounds good. What is the best financial advice that you have received and that you utilize and go back to frequently?
Cash is queen and king.
I love it.
Cash rules
Um,
everything around me.
green. All right. What's your favorite book or resource on financial management?
I haven't read one in a long time because I've been more into the strategy space, like closing the chasm. I've been more into that. So I would say probably that's not like financial management, but like more
Yeah.
strategy. So I've been, just to force myself to move more into the strategic space. I think I would say that. Yeah.
Awesome. Do you have any advice for upcoming financial leaders in the tech space?
Yeah, be intellectually curious about everything.
I love it.
Read all the financial statements, read everything about finance, learn it, dive deep into AI, open up ChatGPT if you haven't, ChatGPT, Claude, Perplexity, Gemini, DeepSeek, open up all of them and just start asking questions. I say just be super intellectually curious.
Awesome. Joy, where can people find you if they're looking to learn more about you or CS?
Yeah. You can find me on LinkedIn. If you just go to LinkedIn and type in my name, Joy Banugo, Mbanugo, you can find me there.
Awesome. Well, thanks so much for this. This has been awesome. Looking forward to hopefully doing this again soon.
All right. Thank you for having me.
Thanks for tuning in to 5 to 50. If you found today's episode helpful, be sure to subscribe, leave a review, and share with other business owners looking to grow. Do you have a question or a topic you'd like us to cover? Connect with us on LinkedIn or reach out to us at ProSeer, where we're empowering entrepreneurs with real-time, actionable insights and financial infrastructure through smarter accounting, tax, and financial strategies. Let's keep this conversation going. Together, we'll help our businesses thrive. Talk to you soon.